Welcome to Alpha Recap, your end-of-day market briefing from stockalpha.ai. Markets closed with a pretty split personality today, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. The tape closed with industrial and utility themes leading, while energy and parts of finance lagged. A real cross-market reset.
So, what really stands out here is the Capex and storage story. There were multiple multi-billion-dollar expansions announced. Shintech's about $3.4 billion PVC expansion and big moves at GE Aerospace and CSL. That showed up in industrials and materials today.
Yeah, that tracks. These are not one-off headlines. They pointed to a visible acceleration in real economy investment, and that tends to lift order books for equipment, chemicals, and construction services over multiple quarters.
Right. And the other thing is storage. Long-duration battery storage deployments jumped about 49% year over year in 2025. That's the kind of metric that ripples through utilities, materials, and industrial suppliers. On the flip side, energy was volatile. A report said crude plunged more than 11% intraday as ministers debated emergency reserve options. That whipsawed the group and kept investors on guard.
Not a great day for energy stocks, no.
Exactly. So the tape was bifurcated. Materials, utilities, and industrials outperformed, energy and parts of finance underperformed, tech and communications were mixed.
I mean, when you step back and look at this, it's really a story of structural demand colliding with headline risk. Electrification and onshoring versus event-driven commodity moves.
Let's break that down. First up, materials and mining. Deals and project progress drove the optimism. Pan-African put together about $218 million for Emerson, and Lundin raised its stake around Caserones. Those are signals of strategic positioning for battery and critical metals.
And governments are focused on domestic and allied supply security, which gives miners and processors some runway. Less risky for well-capitalized juniors and better-positioned refiners.
Short reaction. Big move. Utilities, that was a big bright spot. PJM updated ambient air transmission ratings, which essentially lets some lines carry more current safely under real conditions. Combine that with the storage surge, and you're unlocking grid capacity without building long transmission routes.
Which is huge. More usable transmission and more storage equals faster renewable integration. That's why regulated utilities and equipment makers saw positive headlines today.
Short reaction.
Right.
Industrials. The signal was Capex. Multiple multi-billion-dollar plant expansions. That's not just hiring, it's multi-year procurement for heavy equipment, polymers, specialty chemicals. For suppliers, that's sustained demand.
Honestly, I was a bit surprised by this one. Companies talked growth over cost-cutting, and that's a notable shift in tone.
Healthcare was mixed. There were AI wins, an NHS screening study where AI matched radiologists, and a druggable P53 pathway in lung cancer. Those are solid scientific steps, but antibiotics R&D declines and ER trends left some caution.
So the headline reads as positive, but commercial adoption and reimbursement take time. Investors should separate lab studies from revenue impact.
Technology and communications? AI funding and media hits supported parts of the sector. YouTube scale showed up as a bright spot, but creator pay debates and legal friction capped the upside for broader media.
Right, and workforce retention issues in media companies are a real cost. Not just PR. That's why parts of tech were stable rather than ripping higher.
Real estate saw strong deal flow. A $125.5 million Freddie Mac loan in Brooklyn and large logistics starts. But private credit tension and policy uncertainty kept things tempered.
Short reaction.
Yeah.
Let's talk energy more specifically. There was that stark dichotomy. A report of a more than 11% crude swing intraday versus China importing about 15.8% more crude. Physical demand looks intact, but headline noise hit futures hard.
Exactly. That disconnect creates cross-asset volatility. Energy equities and energy-linked credit will remain sensitive to headlines. OPEC Plus meeting notes, inventories, and China's refinery run rates are the data points to watch.
Crypto and tokenization also made the headlines. Institutional flows into U.S. Bitcoin ETFs were about $167 million, and large names experimented with tokenized assets. Adoption is advancing, but regulatory and legal noise remains.
Short reaction.
Interesting.
And the number that really caught our eye on storage was that 49% jump in long-duration storage deployments year over year. That's not small.
No, it isn't. That's a game changer for grid services and the supply chain for battery metals.
Okay, time for a transition. Let's move into actionable investor insights, what to overweight and what to be cautious about.
Favor electrification and the materials complex, but pick names with execution and balance sheet strength. Grid upgrades and battery storage growth are durable trends, so companies with operating mines or firm offtakes are preferable.
Right. For utilities, look to regulated and contracted growth rather than pure merchant generation. That means companies with visible storage pipelines and regulatory clarity tended to be the winners in today's headlines.
In industrials, focus on suppliers tied to reshoring, defense and semiconductor or biopharma supply chains. Announced expansions from GE Aerospace, Shintech, and CSL suggest multi-year procurement cycles.
For tech and media, be selective. Favor infrastructure and proven AI adopters. Think enterprise software and AI compute suppliers. And avoid franchise-level content risk where creator disputes could hit margins.
Energy and finance demand hedged exposure. If you keep energy positions, favor integrated majors with diversified cash flows and disciplined Capex. In credit markets, stick with higher quality names and watch for technical defaults.
Crypto and cannabis remain policy-dependent. For crypto, small tactical allocations via ETFs or infrastructure names make sense until regulatory clarity improves. For cannabis and psychedelics, watch legislation rollouts and clinical readouts.
Risk management quick hits. Oil volatility can spill into credit and FX, so hedges make sense for material exposures. And regulatory risk across AI, crypto, and healthcare can create asymmetric downside. Keep position sizing disciplined.
Let's hit the most significant moves of the day more directly. Shintech's about $3.4 billion PVC expansion and GE Aerospace Capex headlines signaled a Capex cycle. That matters because procurement for chemicals and equipment will rise over quarters.
Pan-African's about $218 million deal for Emerson and London, increasing its Caserone stake, were the materials M&A headlines. Those sharpen the focus on securing critical metal supply chains.
Amazon lined up a record $42 billion bond package. That showed the corporate bond market's capacity. Also, that $125.5 million Freddie Mac loan showed liquidity in real estate finance for quality assets.
Healthcare AI wins. The AI matching radiologist study and the druggable P53 pathway are concrete examples of near-term clinical upside. But don't confuse academic milestones with immediate revenue streams.
Crypto flows were about $167 million into US Bitcoin ETFs, and there were tokenization experiments. That's adoption, but it came with regulatory overhang.
Let's also name the cross-sector themes to tie this together. Electrification and grid modernization, a Capex cycle in manufacturing and biopharma, broad adoption of AI with concentrated risks, and a clash between energy's short-term volatility and longer-term renewable investment.
What to watch next? Near-term catalysts, OPEC Plus statements and inventories, US macro and Fed communications, company updates from GE Aerospace, Shintech, and CSL, and grid storage solicitations like PJM filings.
Also keep an eye on regulatory and legal milestones, crypto court cases, AI liability signals, and creator rights rulings in media. Those can swing sentiment quickly.
3 quick takeaways before we go. 1. The macro picture was mixed, but not broken. Durable demand for electrification, onshoring, and enterprise AI supports materials, utilities, and industrials. 2. Energy's headline-driven volatility argues for selective positioning and hedging. 3. Use the current volatility to rebalance into execution-oriented names with strong cash flows.
And don't forget to stress test for commodity and regulatory shocks. That's where a lot of surprise downside can come from.
Quick reactions, good notes, final wrap. Today felt like a reset toward the real economy. Capex, storage, and AI were the durable themes. But energy volatility and legal or policy friction kept markets guarded.
If you're building a watch list, include companies exposed to electrification and storage, industrials tied to reshoring, and proven AI infrastructure providers, and then size positions based on balance sheet strength.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll see you on the next Alpha Recap.